Amazon stock split. What does that mean going forward? There are two answers, one old school, one new school. I'm going to tell you both. Coming up next on The Job. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It's 7:44 here in the middle part of the country on Thursday. It is March 10th, 2022. Here's your morning jog around the economic headlines of the world. Amazon, it's splitting its stock. 20-for-1 shares. Wow, that is quite a large stock split. Of course, Tesla did a stock split. Apple did a stock split here over the last decade. Now Amazon going from $2,000 a share to something like $100 a share. Now, on a go-forward basis, I get asked this all the time. Alex, what does a stock split do for my shares? I'm getting more shares, they're at a lower price. What happens? I'll give you two answers, and they're completely different because one's based on sort of classic Wall Street, one's based on new era psychological Wall Street. I think both are reasonable. I tend to think more in terms of the new era. The classic era is I have a Hershey's bar, right? It is one share of Amazon. If I split it in two, let's say I'm Amazon and I split it into 20 pieces, right? Okay, 20 pieces of Amazon, I still have the same amount of equity in the company, which is mathematically true. I have the same earnings that get attributed to me. I have the same ownership in the company. Look, there are all these pieces, right? But it's still the same amount of chocolate. It's still the same amount of equity. I'm still have the same ownership. There should be no difference from a mathematical perspective in the stock price. Classical Wall Street, that's the classical answer. That's completely true. New age Wall Street. Folks make financial decisions not based on logic. They make them based on emotion. Emotionally, when I'm eating this chocolate, piece by piece by piece, I feel like I've got a lot more chocolate. The same thing happens with stock splits because folks naturally think more shares means more money. Stocks tend to go up after they split. It's just psychology in the markets saying more shares are out there, shares are going to go higher. I worked for Charles Schwab before I came here to Exencial Wealth Advisors. I got a million calls. How do I get into X, Y, and Z stock before the split so I get more shares? I got zero calls ever. How do I get after the split? It's a very powerful psychological tool, even if on paper, like I said, the old school approach says it does nothing. It almost always is a positive impact for the stock in the real world, which, by the way, is where we have to invest. We don't get to invest on paper. We have to invest in the real world. Let's hit a big inflation number before we get you off to a nice Thursday. Inflation, 7.9% in February. That's pretty close to in line. I think expectations were somewhere between 7.7 and 8.2%, sort of the middle of the range. Again, we're sort of seeing that peak level of inflation in the 7 to 8% range. If we see that CPI number jump a little higher, that would be very worrying. But from my perspective, going forward in March and April, we're going to see sort of a baseline effect where prices from last March and last April were a little bit higher. So those headline numbers, 7-8%, probably will disappear on a go-forward basis, leading to markets to sort of take a breath of relief. We're not going up as fast. Again, this is sort of an old school versus new school thing as well. What does the data actually say? But when we put that number into perspective and we percentilize it, right, when we put it into a percent, how much does that differ? If it's a smaller percent, even if it's over a bigger number, even if prices are still increasing, folks feel like they're not increasing as much, and that can be positive for the markets. If you want some additional information throughout the week, feel free to find me on the internet. I am out there. Until then, I hope you have a really good rest of your Thursday. I am out.